Should I lease or buy my car? The good, bad, ugly, and determining lease payments. Nothing can be more relaxing than a nice seaside road trip with your family or friends. However, in order for you to do that, you'll be needing a car. Surely buying a car can be quite expensive. Now this is where the option of leasing a car comes in. Hello awesome people, this is Finance Boss, and if you're one of the people who have a hard time choosing between buying and leasing a car, then keep on watching because this video is for you. But before that, please don't forget to click the like button and subscribe to the channel. So, what are we waiting for? Let's get on to the video. What does it mean to lease a car? When you decide to lease a car, you're paying for the right to drive the vehicle for a certain length of time, usually 3 to 4 years. You'll have to pay an initial amount as you leave with the car to cover taxes and fees. What does it mean to buy a car? Buying a car means maintaining possession of the vehicle. People who are little skeptical about buying a car are usually worried about the price, and although some are indeed expensive, you could always consider more affordable options like certified pre-owned vehicles and used cars. If the car is new and being purchased on loan, the monthly payments are usually higher than those you'd have to pay if you were leasing. However, once the payments are made in full, the car is officially yours. So, what are the pros and cons of buying and leasing a car? Number 1. Lower monthly payments. The monthly payments are considerably less than it would be if you were purchasing a car on loan. And it's one of the reasons why people opt for a more luxurious car than they would otherwise afford. After paying the initial amount, paying off the rest isn't that bad. Sometimes you won't even have to make a down payment before driving off with the vehicle. Number 2. You don't have to worry about maintenance. Most new cars have a warranty that lasts around 3 years. When you lease a car for this amount of time, most of the repairs are taken care of. You don't have to worry about the long-term cost of maintaining the car. Number 3. You get to drive a new car every few years. If you're one of those people who love the thrill of driving away in a brand new car, leasing might just be the thing for you. When the lease is up, you could easily return it and exchange it for the next new ride. Now, let's look at the cons. Cons number 1. Most leases come with annual mileage restrictions, which can range from 10,000 to 15,000 miles. And if you happen to exceed these limits, you have to pay a premium, which goes for roughly 30 cents for every extra mile you drive. Number 2. High cost of insurance. Insuring a leased car is usually more expensive than most people think. It's on you to pay for comprehensive collision and gap auto insurance so as not to be liable for the car's worth in the event of an accident. And because of the high insurance coverage, your insurance payments can be a lot higher than if you decided to buy a car instead. Number 3. It's expensive in the long run. By the time your lease is over, you're going to have to either lease a new car or buy one. In any case, you're going to be making monthly payments for a long time. But if you bought a car in the first place, you're free from payments once you've paid off the loan. Buying a car pros number 1. No wear and tear charges. When you buy a car, wear and tear aren't that much of a big deal to you as it is for anyone who's leasing, since they're expected to hand it over in good condition. Moreover, you don't have to pay for any potential repairs once the lease is over. Number 2. No mileage limits. When you buy a car, you don't have to worry about how many miles you cover. You can leave the dealer's lot and drive as far as you want without having to think about the extra fees, unlike leasing, which comes with a mileage cap. That's why, if you know you're likely to cover a lot of miles, it makes more sense to buy a car instead. Beyond the cost of fuel and maintenance, there's no extra financial cost for driving long distances. Cons number 1. Buying a car is more expensive in the short term. You're probably going to spend more each month if you choose to buy a car as opposed to leasing. Most of the time, the monthly car payments are higher than lease payments for the same vehicle, making them more expensive to pay on a monthly basis while you have a car loan. The cost of owning a car only becomes cheaper once the loan is fully paid. Number 2. You may have to pay more sales tax. If you choose to lease, you'll likely only have to pay the sales tax on the amount due at signing together with your monthly payments depending on which state you're in. The amount of sales tax is based on the negotiated price of the vehicle in most states. In other states, you can deduct the amount of your trade-in but still have to pay tax on the majority of the vehicle cost. Number 3. You might also be required to make a bigger down payment. You can reduce the size of the monthly payments when you put down more money at the beginning, but as a result, a huge chunk is taken from your savings. Number 4. Long-term maintenance cost. Owning a car comes with a lot more responsibility. It feels good to say you own it, but you might not be as excited when something breaks and you have to get it fixed. Making up your mind on whether to lease or buy a car depends on a careful assessment of your finances and your driving habits. You need to think about what you can afford to pay comfortably upfront and roughly how many miles you spend on the road on average to find out which route would be more cost-effective for you. How to calculate car lease payment? As we have already established, lease payments are generally lower than the monthly loan payments for a new car. Monthly car loans are usually calculated based on the sales price, interest rate, and the number of months it'll take you to repay the loan. Lease payments depend on factors such as sales price, length of the lease, expected mileage, residual value, rent charge, taxes, and fees. Step 1. Monthly depreciation. You first need to know the residual value in order to calculate the estimated depreciation. So, to calculate the residual, use the formula monthly depreciation is equals to capitalized cost minus residual value divided by months. Step 2. Monthly finance charge. The formula to calculate the monthly finance charge is given as monthly finance charge equals capitalized cost plus residual value multiplied by money factor. Step 3. Base monthly payment. The base monthly payment is the initial payment before tax has been added. To calculate your base monthly payment, simply add your monthly depreciation to your monthly finance charge. Base monthly payment equals monthly depreciation plus monthly finance charge. Step 4. Monthly lease payment. The last thing that needs to be added is tax, and lease taxation usually varies depending on the state. To calculate your monthly lease payment, you simply need to add the tax to your monthly payment using the formula monthly lease payment equals base monthly payment multiplied by 1 plus tax rate. Step 5. Drive-off and disposition cost. At the inception of the lease, you should expect some upfront cost and maybe even a lease end cost. These can include an acquisition fee, document fee, your first payment, registration fee, down payment, disposition fee, additional taxes, and more. Whew, that was quite long, wasn't it? But at the end of the day, the question of whether to buy a brand new car or to lease one is based on your financial capacity. Nonetheless, the pros and cons are already given, so it's up to you to decide. That's it for the video. Don't forget to leave a comment down below about your thoughts and subscribe to the channel for more awesome content. Once again, this is Finance Boss, signing off.